The GTA housing market isn't just slow, it appears to be at a complete standstill. Across all of the GTA, doesn't matter what region you're looking at, sales are down year over year, and the growth is just not there compared to previous years. How about showing and offer activity? Also flat. In fact, it is the slowest start to a February on the freehold side since 2008 and beyond, and on the condo side since 2009. So is this just a sluggish start to the new year, or is it pointing to something a little more dire? Hey, if you're new here, my name's Rob Marsiglio. I'm a realtor servicing the Greater Toronto Area, and every week on this channel, I break down all of the latest real estate trends so that you don't have to. Now, let's give these sales numbers a little bit more context. On average, in the first week of February, we are used to seeing about 950 freehold sales. This is based on averages going back to 2008. And on the condo side, we're used to seeing about 520 reported sales. This year in 2025, we saw 599 freehold sales reported in those first 7 days and only 399 sales reported from the condos. This represents about a 37% drop from the average on the freehold side of things and a 23% drop on the condo side. And as I said up the top, it's not just about the sales activity. When you look at buyer actions in terms of showings and offers, showings are flat for the last few weeks. Offers are also flat for the last few weeks. It doesn't look to me like buyers are just waiting for better deals. It looks like a lot of them are just not engaging with the market at all right now. Looking at it from a rate of sales activity, so this is kind of the rolling 7-day total for reported sales across the GTA, you can see that while we're used to seeing things pick up in February, this blue line is 2025. We actually saw a little bit of a dip and a decline through that first week of February from a sales perspective. It has picked up a little bit in the last few days, but still nowhere near even 2024 levels where we were seeing about 1,340 sales reported every 7 days. We're just kind of over 1,060 sales reported right now. So, just shy of 300 less than we were seeing last year at this time. And as a reminder, last year was a historically slow start to the year as well. 2023 was a wash, 2024 was a very slow start too, and 2025 is even slower. I always believe it's important not just to look at these numbers in isolation though. We can always compare the reported sales numbers to how many new listings we are seeing come to market. That gives us our sales to new listings ratio. And again, from this metric, ultra slow start to February across the GTA. And here's what I mean by that. 27.93% is the sales as a percentage of new listings on the freehold side and 24.55% on the condo side. You got to go back to before 2008 to find numbers this low, and I'm not even sure if you will find numbers this low prior to 2008. Bottom line, by this metric, it puts both freehold and condo property types firmly in buyer's market territory right across the Greater Toronto Area. So why are buyers staying on the sidelines? Well, we've talked a lot about prices versus interest rates in the last couple weeks, but I think the number one theme is just uncertainty. As my colleague Daniel Foch said in this very succinct tweet, economic and political uncertainty equals the pause button, and that applies to the real estate market. Now, again, what are buyers uncertain about? Well, there's no shortage of uncertainty in our world right now. Let's start with Bank of Canada's rate path going forward. I pulled this article from Canadian Mortgage Trends. Market experts forecast 2 more quarter point cuts from the Bank of Canada. According to the Bank of Canada's latest quarterly market participant survey, most respondents expect the central bank to implement 2 quarter point rate cuts, bringing the policy rate to 2.5% by July. That's 25 basis points lower than the forecast in their Q3 survey. The Bank of Canada is then expected to maintain a 2.5% policy rate through to the first quarter of 2027, and that's when they see a 25 basis point rate hike to 2.75%. Now, the outlook of the Bank of Canada survey is a little bit more cautious compared to the current forecast from the big 6 banks, which see the policy either remaining at 3% or falling to 2.75% in March, then ending the year anywhere between 2 and 2.25%. And here are those numbers represented in this chart from the same article. You can see our current rate is 3%, and by Q4 of 2025, kind of the biggest drop cases from Royal Bank saying it'll go down to 2%. Scotiabank says they'll hold steady at 3%. And then you can see this little asterisk. The BMO forecast of 2.5% assumes no tariffs. With tariffs, they'd expect the policy rate to come down to 1.5%. Stick with me just a little bit more. There will be some tariff talk as point number 3 of this uncertainty. But before we get to point number 3, we have to talk about point number 2, which is uncertainty over the direction of inflation. It's been on a relatively steady downward trend in Canada for the past little bit, but there was a hot reading come out of the US just this past week, which may make people think twice about where it's headed in Canada. As you can see from the BBC, US inflation unexpectedly increases. So it increased by more than expected last month as higher egg and energy prices helped to push up the cost of living for Americans. Inflation rose to 3% in January, its highest rate for 6 months and above the forecasts by economists, which was 2.9%. And it comes weeks after the central bank decided to hold interest rates, saying there was significant uncertainty about where the economy might be headed. And then lastly, a big reason for all this uncertainty, as we alluded to at the top, is that tariffs, the imposition of tariffs, when will they come into play? What will they affect? We know that steel and aluminum tariffs are alleged to come into effect. Here's a little bit about what the Financial Post thinks about these tariffs. And they're saying why Trump's tariffs could hit Canada harder this time around. The impact is already being felt. More than a third of small and medium-sized businesses in Canada that export goods are experiencing canceled or paused orders because of tariffs, according to the Canadian Federation of Independent Businesses. Now, Simone Gaudreau, the chief economist of the CFIB, said uncertainty around tariffs is almost as damaging as tariffs themselves. It reverberates among business owners right now, and businesses are adjusting operations on the fly as a result. About 1 in 5 businesses say they can survive less than 3 months without support if tariffs hit. This should sound an alarm for policymakers. So for a lot of buyers, this decision to move forward with a purchase isn't just about price, it is about that economic uncertainty. Anecdotally, I'm seeing it on a personal level in terms of people reaching out with DMs, asking me hypothetical questions. Job loss is looming a lot larger on their minds right now. Is now a time for them to sell and then maybe rent for a bit and get back into the market in a couple of years? It's a hot topic, unfortunately, for a lot of Canadians. Economic uncertainty, as Daniel Foch said, causes people to hit the pause button. So I will ask you, does this slow start feel like just a sluggish start to the year, or does it feel like the start of something bigger? Will we see things pick up in the springtime, or will it continue at this kind of moseying along pace that we're seeing right now? Let me know in the comments below. I'd love to hear what you're thinking. So here's where we stand recapping this video. February sales are at a 16+ year low, whether you're looking at the freehold or the condo markets. Buyers aren't just waiting for better deals, really, it doesn't seem. They're not engaging, as we saw based on those showing and offer numbers being relatively flat. And economic uncertainty, including policy rates, inflation, tariffs, that has really kind of taken up a big chunk of mind share in a lot of Canadians' minds and is definitely having an impact on the GTA housing market. Before I go, if you are planning to buy or sell in the GTA and you want to have a talk with me about it before you start making your plans, there's a link down in the description of this video. You can book a call with me directly in my calendar, no obligation whatsoever. I'd love to chat with you about your plans, see how I can help out. So click that link and book a call with me today. And if you did get some value out of this video, you enjoyed the content, please consider subscribing to the channel. Maybe like this video so I can reach more people just like you and so that you don't miss anything in the weeks ahead. Thank you so much for taking some time to watch this video today. Until we speak again next time, please stay safe and cheers. Oh, and also, happy Valentine's Day.